Hi, this is Kerry Artac with Artac Advisory, and this is a video supplement to the March edition of our ETF allocation strategy. Our monthly ETF allocation strategy is an 8 to 12 page newsletter published at the beginning of every month, offering insightful technical analysis across a broad range of the more popular, higher volume exchange traded funds. We break our analysis down into four broad asset classes: equities, bonds, currencies, and commodities. The video segment is intended to underscore the headlining portion of each monthly letter. In February, increasingly robust housing data continued to emerge, both in the sales and price level categories, suggesting the U.S. real estate market may in fact be forging a bullish path into later year. And given the tight correlation between trends in mortgage rates and the U.S. real estate market, we headlined the March issue with analysis of two high-volume housing industry ETFs, the iShares Barclays Mortgage-Backed Securities ETF, symbol MBB, and the iShares Trust Dow Jones U.S. Real Estate Index, symbol IYR. In this video, I'll walk you through a series of detailed charts examining key trend-defining support and resistance levels in both markets, as well as the mid to longer term objectives for each. This is a monthly chart of one of the more popular mortgage-backed security ETFs, the iShares Barclays Mortgage-Backed Securities Fund, symbol MBB, which reflects the performance of investment-grade 15 to 30-year fixed-rate mortgage-backed securities of Ginnie Mae, Fannie Mae, and Freddie Mac. A little historic backdrop, as you can see the bullish reaction following the Fed's announcement in November of 2009 of a mortgage-backed security monthly purchase program, which continued into March of 2010. It was reinstated in September of last year at a pace of $40 billion a month and is expected to continue into early 2014. While this market has eased back since last September, inverse to the progression of rising mortgage rates over the same time horizon, it bottomed out nicely in February off the 107.46 channel bottom, above which the top of the same formation at 109.60 is expected over the next 3 to 5 months, just shy of the November 2010 high at 110.22. However, early March has quickly tested the 107.46 formation, and if we settle the month of March below 107.46, then bearish continuation over the next 5 to 8 months is expected into the 102.75 region, which should contain selling into 2014. This mortgage-backed security ETF is currently on our hold list, but closing the month of March would elicit a recommendation for long liquidation. The strength of our real estate market will have some bearing, of course, on whether this bearish scenario transpires in this particular mortgage-backed security fund. And with that, we'll segue into that real estate investment trust ETF with the highest average daily volume. The iShares Trust Dow Jones Real Estate Index, symbol IYR. This ETF reflects the general performance of the U.S. real estate market, as its holdings are spread across a broad cross-section of U.S. real estate, including residential, commercial, and retail sectors. It should be considered a sign of macroeconomic health, that the real estate market in general can trend higher, while at the same time mortgage rates are rising in steady accordance, a trend illustrated in the previous mortgage-backed security chart. This real estate investment trust ETF is a month or two at best from testing primary support in the 6081 to 6133 region. But if it did so between now and, say, the end of April, this region is indeed capable of containing selling through 2013, above which the 76.64 formation remains a 3 to 5 month objective, the 8403 channel top attainable by year's end, a nice profit-taking zone when tested. Examining the potential, yet nevertheless unexpected downside scenarios, a monthly settlement below 60.81 indicates 3 to 5 months of bearish continuation into the 52.37 region, where this market should bottom out into next year. But it is the upside scenario we're expecting, and this is one ETF we're recommending as part of your overall portfolio allocation, with other buy and hold recommendations listed in the March edition of the monthly ETF allocation strategy. We do offer a 1-month free trial for our 8 to 12 page ETF allocation strategy. Just call or email and we'll be happy to send you the most recent edition at no cost. Keep visiting our website in the weeks and months ahead for a continued series of informative ETF analytics. Thanks for watching.